Welcome back. You're watching Big Deal, and Sudhir as well as Nitya are right here with us. So Sudhir, you were talking about the financial services space. That's where we left in the last segment. Which pockets look most interesting? Is this valuation, the current market valuation, is that concerning for an investor?
So if you look at just pure play listed banks, etc., you would find that the valuations have run up. But there are different strategies to play, as I said. In our case, what we have done is we have looked at affordable housing as one area where there is a large segment of the country, the non-salaried segment, which is now coming into the housing ownership market. And we have invested in a very young company, and we are scaling it up with the management team, and that kind of with the kind of concessions like the credit link subsidy, etc. You find momentum coming there. For example, just the last week I was visiting one of the markets of this company and met a borrower who has borrowed a 12 lakh home loan, and he has got the credit link subsidy. He's getting a 2 lakh refund. So that's a kind of, to just imagine that 20% of your housing cost is coming back is a big concession and allows housing ownership to expand. So we've done some of these kind of things. So there are different ways to play that. The insurance sector looks interesting, particularly if you look at something like the general insurance space is looking interesting. There is big momentum in health. We saw another private equity transaction happen recently in the sector. Motor is kind of coming back in terms of profitability getting established. It's just that from a private equity investor's perspective, there are few deals in that sector. There is much more owned by strategics, and therefore you have to really look for that opportunity. But many places look interesting.
Yeah, and in the consumption space also, you spoke about that. But you're not looking at consumption as a theme across the board. You are very, very picky about that particular bit. You have Dream 11, which is into sports online platform, as well as Arvind Fashions. Then PVR is one of the investments that you have been in for a very long time. So you have very specific choices when it comes to the consumption space. What really drives, or which are the factors that you look at here?
Yeah. So our funnel is wide. So we look at a whole lot of transaction. But for us, what needs to fit not only is the underlying subsector and growth, but management quality, ability of this company to keep building value. So we have a matrix called option value. How much of you have a certain business case which the management is able to present to you, and then there is something which you can't model, but which value and option is being created of entering other adjacent businesses. So all of these matrices have to really fit. But if you even the names that you have currently taken from our portfolio, Dream 11. New concept, young platform, very exciting, targeting the youth of this country and playing to that theme. If you see Arvind Fashions, again targeting the younger population, this whole move from formal wear to more casualization of the Indian youth is what it's playing for. And even within Arvind Fashion, we're really playing across right from the entry into their value retail format, unlimited, to the high end, whether it's Gant or Nautica or US Polo. So it's a whole lot. So I wouldn't say we are really, being very, we are selective about the particular story that we back. But consumption, we have been looking across. Even food looks very interesting. Food and dairy looks very interesting. But we have to find our deal there.
What about hospital space?
So we have a controlling interest in a hospital in Bangalore, and we have turned it around. It kind of it's doing well. It's kind of picked up in terms of occupancy. Again, the challenge there is in terms of it is still from a deal flow perspective a sector where there are few assets that come into play, and therefore valuation tends to be very aggressive. But if you look at, there are specialty hospital chains which are now coming up in terms of, say, IVF clinic in the child and maternity care space. There are chains coming up. You saw some activity in these kind of niche areas which are coming up, some of which look interesting. But it's not. But it's a difficult space to just the flow of asset perspective, and which is why deal
making is not as easy.
Not easy because there are few large chains which have happened, and now the next set needs to come up. There's a huge gap between the big ones and the really...
But the valuation expectation everybody thought has gone to another level, which doesn't look like is
Coming
the
down.
reality at this point. But I wanted to also bring about the point on the ticket size. Do you think that with CPPIB as you have a tie-up there, so are you going to co-invest with them, and will that give you more elbow room to participate in larger transactions?
Not just CPPIB, we have some other large investors as well, all of whom are kind of, if one were to talk about in terms of size, say $200-300 billion, CPPIB is of course a very important investor, and we respect, we have worked with CPPIB a lot, we respect them in terms of the way their decision making grows, and all of them give the, and all of them have a significant interest in looking at the Indian space. So our sense is that the flow of capital into India is going to increase. You would find ticket sizes kind of transactions going up. We are at that, probably that end of the hockey stick where things start looking up, and we have spent far too much time around the trough waiting for things to improve. But now there seems to be a lot of things happening, and you see that clearly in certain sectors where things are improving pretty dramatically.
All right, so there is improvement, and more CPPIB co-investments can be expected, is my precise point. Is
Yes.
that something that could
aspiration as well, yeah.
All right. And in distress space, is that also a focus area, or is it going to be more wide range?
It is a focus area. So the entire reason for setting up a team is the fact that it is a focus area. We are very closely watching the way the IBC, the code is getting implemented, the way the NCLT courts are going to get their act together, the way will resolution happen in these 6-month kind of time frame. What is the kind of litigations that would be there? There is the first set of cases have gone to the NCLT, and we are closely watching it. If the resolution does happen in the time-bound fashion, I think there will be significantly more supply coming from the banks, and you would find that the demand will far outstrip supply in terms of funds like ours coming in to pick up that. It's the right model needs to be there. The appetite for taking on some of these is quite high.
Of course, we are all at an experiment stage when it comes to the NPA resolution. Everybody is watching out for it. Another big trigger would be GST and how that's going to really impact our lives and your portfolio companies and your investment decisions. We'll talk about GST and its impact also on the other side. Stay tuned to Big Deal.